I'm Oliver Sloup with Blue Line Futures, coming to you from the suburbs of Chicago with another episode of Tech Talk. Got a couple different markets for you today. Corn, we're going to touch on the July contract as well as new crop December and see how those charts are similar, but also a little bit different as well. We're going to touch on wheat and wrap things up with live cattle. To kick things off, we've got the July corn contract pulled up here, and this is the last chart that we used in the last Tech Talk, and we talked about if trendline support gives way, we could potentially see that trigger some long liquidation to support down here near the 740 area, which was previously resistance at the beginning of March and at the end of March, and what was kind of the secondary breakout point here at the beginning of April. We tested and held that yesterday. Today, we were not so lucky. We broke through below here, and it really, the selling fed on itself, taking us to the next support pocket near 729, which we laid out in our Grain Express this morning. This is kind of the congestion point from this consolidated trade that we saw through the month of March. You've also got the 100-day moving average down here near 712. The RSI is starting to get a little bit oversold, but we're not to the extreme levels that we have seen in the past for the corn market. So I do think that we might be due for a little bit of a bounce, but previous support is now resistance. So the bulls need to get back out above 745 with consecutive closes or a conviction close to feel pretty good about neutralizing some of the technical damage that's been done here over the last 24 hours. My biggest concern here is that we've all been conditioned to buy the dip for about 2 years in these grain markets, and eventually that will come to an end. Is this the end? Nobody knows for certain. That's always a hindsight thing. But just be prepared to manage your risk appropriately. I'm having flashbacks to some years. 2014 comes to mind about this time of year where we started selling off. And we just never got the bounce that everyone was looking for to get hedges back on to protect price. So again, that's what we're looking at for the July contract here. Moving over to the December chart, a breakdown as well. We got down towards that psychologically significant $7 handle. There weren't enough buyers down there, and we broke down to previous resistance. Again, this was at the end of March, and the breakout point at the March 31st USDA report. We tested and held that. That is a must-hold line in the sand for the bulls. A break and close below 680 opens the door for a full retracement of this move on March 31st, which comes in a little bit closer towards that 655. So for July and December corn, we're at some very pivotal levels here going into the last couple days of trade this week. It really could set the tone going forward if these levels can't hold. As mentioned with the July corn, December corn here, previous support now becomes resistance at about 7 to 705 is what we're looking at there. Now moving over to the wheat market, ugly. We've talked about this in multiple interviews over the last several weeks, is putting it in the untradeable category just because the volatility and the intraday swings and the overnight swings are unbearable for a lot of people. So we're not really trading this a whole lot with clients, but did want to bring it to your attention that we're at some pivotal levels as well. Testing the early May lows here down near 735, a break and close below here could take us back to these April lows, sub $10 in that 980 area. So again, another big level to keep an eye on through the rest of this week's trade. Potentially we can get a little bit of a relief rally, and a relief rally again is going to be kind of violent. We sold off almost $1.25 from yesterday's highs. A relief rally could theoretically take us back above 11 bucks pretty easy, which is above about 60 cents higher than where we settled today's trade. So expect the volatility to continue there. Options would be a way to play it with minimal risk to get some skin in the game if you really needed to. We're available to talk different strategies with you if you have questions on that. So that's what we're looking at for the wheat market. Wrapping things up with live cattle, we've got August. Finally caught a move today, which felt good, but zooming out on things, you can see that it really didn't do a whole lot to change the technical landscape. We were able to hold the low end of the range, which was support back here last fall in October, which was good. Because a break and close down below here would have opened the door for a potential retest to those September lows for that August contract. Comes in a little bit closer to 127. So we were able to hold 130, which was a must-hold area. Now we need to really get out above this 133, 134 area for the August contract to start repairing some of the technical damage that was done over the last about the last month and a half, where we started marking lower highs and lower lows, move out above 134. I think we can go make a run at the 100-day moving average a little bit closer towards 137 at that point. We'll kind of reassess things, but again, kind of stuck in this no man's land. Hopefully we can get out above here and get some bulls back in the game. We know that the commitment to trader support have showed funds reducing quite a bit of length over the last several weeks, and they're at a very small net long position. So if we can get a friendly catalyst, they've got powder to add there. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures. Remember, trading futures and options involves substantial risk of loss. It is not suitable for all investors.